Guys, we have a lot of news that signals that Bitcoin is getting more big investment from institutions, not just in the United States with BlackRock and Fidelity, but around the world. And despite what the Fed says or what the SEC does, they are not going to be able to stop it. And of course, with Bitcoin comes the rest of crypto. So, a $500 billion bank called Nomura in Japan from yesterday, they have started an adoption fund, and basically they'll have long only exposure to Bitcoin and be available to institutional investors. So there's going to be more institutional funds, and this is just another sign that big players really want to come in. Now, obviously, it's not going to be all $500 billion into Bitcoin, but there will be a significant amount. And this is Japan's largest investment bank. And of course, this is from their digital asset subsidiary, Laser Digital Asset Management. So if you're hearing about Laser Digital Asset Management, that's what they're not talking about. They've launched a Bitcoin adoption fund for institutional investors. Now, generally what happens is they launch something for institutional investors, and then soon afterwards, they will actually launch something for retail investors because they want to get the full breadth of the market. Institutions is easier to get past regulations, so that's why it's always first. So the thing is the Bitcoin-based fund will be the first in a range of digital adoption investment solutions that the firm plans to introduce. And of course, they have over $500 billion worth of assets and offers brokerage services to leading institutional investors. And they're not going to be the only ones coming in. Japan is a lot better in terms of regulations than the United States in Bitcoin and crypto. And of course, it offers long only exposure to Bitcoin, which means you cannot short it. That's right, you cannot short the heck out of it. I wonder if other funds are actually going to follow this model. So you can only long Bitcoin at this fund. You can't really short Bitcoin at this fund, which should help drive the price up. The financial giant has chosen Komainu as its regulated custody partner. The Bitcoin fund is a portion of the Laser Digital Fund's segregated portfolio company that has been registered as a mutual fund in accordance with the Cayman Islands Regulatory Authority. So basically, they think that Bitcoin is an enabler of the long-lasting transformational change, and the long-term exposure to Bitcoin offers a solution for investors to capture this macro trend. So this fund is not for buyers and sellers and traders. It is obviously for people who are interested in holding Bitcoin for a very long time. And it could be the first of its kind. If it's the first of its kind and it's successful, I believe other funds will be like this too. And if there's more funds like this, I do believe it will drive the price of Bitcoin up. Nomura's the fund is the first of this type, but Nomura has actually been investing in the digital asset ecosystem landscape and for some time. Since about a year ago, the firm launched its digital asset venture capital arm to stay at the forefront of digital innovation. And earlier in August this year, also won Dubai's Virtual Asset Regulatory Authority's license to operate in the country. So they are multinational, they're a multi-billion-dollar firm, and they're very much leaning towards the digital asset future. So Japan's biggest investment firm, I think it will pull quite a few institutional investors in. And of course, it's going to be extremely, extremely good for cryptocurrency, especially because it's a long-only fund, meaning you can't short sell it. Not really sure about the leverage and all this stuff, but I do think this will attract a lot of people in Japan to actually have long exposure to Bitcoin for a long period of time. It's not like short-term investment. It's probably several years down the road. So you can see more money actually being trapped in Bitcoin for a longer time, which eventually does pull it up. And the other thing is the inactive Bitcoin supply has hit all-time highs, which means that people are not keeping them on exchanges. They're keeping them in long-term hold wallets. So this is for 3 and 5 years. So it's not people that have actually you could say, oh, people have just lost their Bitcoin keys. I don't think that's the case. I think these are people that are just not selling during the bear market, which means there's less price movement on the way down. So basically, if you look at the on-chain data, holders are accumulating BTC with exchange holdings down to yearly lows and the percentage of inactive BTC supply at all-time highs. Inactive BTC means that BTC that's not in moving. That generally means long-term hold BTC. So right now, that signals that we've actually hit a bottom because the long-term BTC's hit an all-time high, which means people are not desperate to sell. Basically, all the short-term sellers have sold. Everyone that wants to sell is sold. And people are just accumulating the Bitcoin, holding it for the long term, so they're not panic selling. And that's what bear markets kind of depend on. According to Glassnode's Bitcoin supply last active chart, inactive BTC that has not moved from an address for more than 1, 3, and 5 year timeframes has been at all-time highs since July 2023. So, this summer basically was a critical turning point. People are just stacking Bitcoin. They're not selling Bitcoin. That's kind of why probably like Bitcoin dominance has started to increase, because they're still selling the altcoins. But, altcoins do follow Bitcoin. And if people really aren't selling Bitcoin down anymore, then altcoins have a very, very limited time to actually go down. And you should definitely buy now. I think in 6 months, people are going to hold more and more and more Bitcoin. And you're not going to be able to buy in the $20,000 range anymore. So the time to buy is now. That's what these analytics are actually showing. An estimated 69% or 36.8 million addresses have held BTC for over a year. And that's a large amount. Crypto quant charts also reflect Bitcoin outflows from exchanges that have steadily declined from July 2021, with just over 2 million BTC remaining on exchanges. It's about 10% of the overall supply. Maybe like 13, 14% of the actual real supply, because some of the Bitcoin has actually been lost. What that actually means is, yes, there's not as much liquidity in Bitcoin, but that's not necessarily a bad thing, because people are just keeping Bitcoin in their own wallets, which means they're much less likely to sell and dump the price down. Once again, since July, Bitcoin has actually been increasing in active wallets, meaning that we've probably hit a bottom for this cycle. And if you actually look at the 4-year cycle, we usually hit a bottom about a year after the top, and that was last December. So there's more and more signals pointing to the fact that we've bottomed and we're probably on the way up, albeit very slowly. So Binance obviously tops the exchange volume, the exchange amount, with 543,000 Bitcoin on its books. But obviously it's seen a lot of Bitcoin outflows. That partly for Binance is probably due to its legal issues, but also just overall on the exchanges, the outflows have been pretty huge as people discover self-custody. OKX is the only exchange in the top 10 that actually recorded a significant inflow of Bitcoin. Not really sure why, but the overall trend is that there's a big outflowing of Bitcoin from exchanges, which means people aren't in a hurry to sell, which means people are willing to hold for a lot longer, which means there's less Bitcoin on the exchange to actually sell. Now, there's still several 100,000 on the exchange to sell, and that could actually tank the price, but so much off the exchanges means that people are not in the mood to panic sell, and even if there is a large sell on the exchange, there's not really going to be a panic sell flow out that actually follows. So the chance of dumping 10, 20,000 points or 10,000 points or more is probably over for now. And, with today's Fed meeting, Jerome Powell pausing rate hikes, maybe signaling just one more rate hike for the rest of the year, the European Central Bank signaling that it's done raising rates, and with the SEC losing a lot of these lawsuits, which is very, very bullish for crypto, I do think that there's only really bullish news ahead. I'm still waiting for them to announce the SEC's defeat in the Coinbase case, which would actually completely rackle the SEC and basically screw them over for any future enforcement actions that they might have. And looking at the judge's dispositions towards the SEC, it definitely looks like that is very, very possible, even quite likely. And I think before the Ripple case, before the Grayscale case, everyone thought this was all just a play or a show, and that the judges were eventually going to rule in favor of the government, but that has actually not been the case. Not at all. The judges have ruled against the government in many of these cases, and I do believe the judges will continue to rule against the government in many of these cases as well. And I do actually believe they'll hand crypto the victory, mainly because the law is not on the SEC side, but also because Coinbase and other organizations are organizing groups against crypto. They're probably beginning to see the political consequences of their stance against crypto. And many of them are starting to get donations in terms of cryptocurrencies for political funds, and they want that money. Many of these representatives are looking at crypto as a precursor for new high-paying jobs in their state. And because of that, They want those jobs in their state, and so they're not going to be anti-crypto or anti-Bitcoin. So we're getting a lot more pro-crypto senators and pro-crypto congressmen in office from both parties. And eventually, I do think the Democratic Party is also going to turn on the right foot once they realize that the political cost of being anti-crypto is way too big for them to sustain. And I think we are actually reaching that tipping point right now, as several Democratic congressmen from states have actually come out in support of crypto. A lot of the crypto bills in the House are actually bipartisan now. The Senate's a little bit more stubborn, but even in the Senate, Elizabeth Warren was only able to get 8 other Democratic senators to sign on her anti-crypto bill, which means the other 40 were not interested in her anti-crypto bill. And Gary Gensler is losing more and more face as time goes on, as he loses more and more of these lawsuits. So the thing is, I think the worst of it was last winter because everyone was deadly afraid of how the crypto lawsuits are actually going to turn out. And they've turned out pretty well for us. Everyone was afraid of the 9% inflation rate. It's now 4% inflation rate. And everyone was really afraid of the Fed really jacking up rates. They did that, but now they've actually paused, and it looks like they're going to settle on 5.25 to 5.5. So all the fear is actually over. You have big giants like Nomura Bank coming in that you can only long Bitcoin on, and you have other institutions that are actually taking up crypto as well, and these crypto advocacy groups in Washington, D.C. So the future of crypto looks really bright. And that's why I believe that you should buy it now and not 6 months from now. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.